Welcome to the Explainer. Today, we're tearing down Snowflake's absolutely massive fourth quarter earnings report and really digging into what it all means for the future of AI in the business world. This report was a big one, so let's get right into it. So, Snowflake just closed out their fiscal year with a huge quarter, and as you read through everything, one theme just jumps off the page again and again: artificial intelligence. I mean, it is the engine driving pretty much everything they're doing right now. And headline number, the one that really caught everyone's attention, is a staggering 30% year-over-year growth in their product revenue. And this wasn't just a small beat, this was a blowout. They flew past what analysts were expecting, and it just shows some serious momentum.
So the big question is, how did they pull this off, and what does it signal for the year ahead? Well, in this explainer, we're going to cover the big picture, we'll dive into the numbers, we'll look at the AI engine that's fueling all this, here's some real-world stories, and then, of course, we'll look at the road ahead.
All right, let's just get to the main story here, because it's actually pretty simple. Snowflake went all in on enterprise AI, and man, is it paying off. And it's happening a whole lot faster than I think anyone really expected. The company's CEO, Sridhar Ramaswamy, he put it perfectly on the earnings call. He basically said that AI has gone from this future promise to a today reality for them, and they see themselves right in the middle of this whole thing. But, talk is one thing, the numbers are what really tell the story. So what do they actually say? Let's take a look, because these results are just impressive, right across the board. So like we said, they brought in $1.23 billion in product revenue. That's the core of their business, and seeing 30% growth at that scale, that is a very strong signal. And check this out, because this number really shows you the confidence customers have for the future. Their RPO, or remaining performance obligations, which is just a fancy term for future revenue that's already under contract, it hit an incredible $9.77 billion. That's up 42% from last year. It means customers are signing bigger and longer deals.
And the strength isn't just in one spot. They grew their base of really big customers, we're talking the ones paying over $1 million a year, by 27%. Their net revenue retention, that's basically how much more your existing customers are spending, that's at a super healthy 125%. And on top of all that, they added 740 brand new customers, a 40% jump. So see, this isn't just a company that's growing fast, it's growing stronger. They are solidifying their spot as the go-to platform.
Okay, so what's really behind all this growth? When you really look at it, it all comes down to how fast customers are jumping on their new AI products. And this is where the story gets really interesting. I mean, these aren't just numbers on a page. They show a fundamental shift. To have 2,500 accounts adopt Snowflake Intelligence in just its first quarter, that tells you there's a huge appetite from regular business teams to get their hands on AI. And getting Cortex codes over 4,400 customers, that means they're winning over the developers, and that's critical. So this isn't some slow, gradual thing. This is an explosion. It's a total validation of their strategy. And this isn't just theory, right? We can actually see the real-world impact in the stories that Snowflake shared from its customers. They show you exactly how these AI tools are creating real value. Take a huge global company like Toyota Motor Europe. They're now using Snowflake Intelligence to build and deploy their AI agents way faster. What used to take them months is now taking them just a few weeks. I mean, for a big company, that kind of speed is an incredible competitive advantage. And then for their developer tool, Cortex Code, one of their partners just described it perfectly. He said it was like his team had been digging with shovels this whole time, and Snowflake just came along and handed them bulldozers. I mean, that's a pretty powerful way to describe a leap in productivity, right? Now, looking forward, Snowflake gave some really confident guidance. But what I also found interesting was how they dealt with one of the big challenges of this new AI era head on. Management was really open about this tension that comes with these powerful AI tools. On the one hand, you have this amazing promise of automation and speed. But on the other hand, because Snowflake's model is based on consumption, there's a real risk for customers of getting sticker shock from a sudden spike in their bill. So their solution is to just tackle this directly by giving customers way more control. They announced they're rolling out spending caps for each user and account, and they're also introducing new pricing options to make the costs more predictable. That's a really smart move to build trust as this new tech rolls out. And even with those risks, their outlook is incredibly strong. They're forecasting 27% product revenue growth for the whole next year, which would put them somewhere around $5.66 billion. That guidance tells you they expect this momentum to just keep on rolling. So what's the bottom line here? Look, Snowflake is making a huge bet. They're combining that trusted data that companies already have with powerful AI tools that are actually easy for people to use. And by doing that, they're positioning themselves to become the central control plan, kind of like the main operating system for this new age of AI agents. They want to be the platform where all happens. And honestly, after a quarter like this, the real question isn't if they can do it, it's just how fast.